this month's update, as usual, we've got 4 pieces of great content for you. However, a little bit of housekeeping just before I go through those pieces of content with you is that in 2025, by the time we get to spring, we're going to be moving away from the usual way that you receive your updates, which is via email currently. It's a bit clunky from our end, a little bit inefficient, and ultimately, you're watching that update on YouTube. So what we're going to be doing is just uploading the video directly to YouTube. And as long as you subscribe to our channel, then you'll get a notification when we've sent the upload and you can watch it. It's far more efficient. And the real benefit for you guys is that when you're on our channel, what you'll see is a huge resource of educational content that you can access at any time to educate yourself on a particular topic that's to do with mortgage, finance, or anything with a pound sign. So it's a resource that we've made available to all our clients. It's all uploaded on YouTube. So if you go onto our channel and get used to doing that, then that content will be there for you, hopefully for years to come. Right, back to this month's update. So as usual, the first piece of content is what on earth's going on with interest rates? What's going on with the Bank of England? I'm recording this on the 16th of December. So by the time you're watching this update, I guess you'll know whether the Bank of England are stick or twisting. So I'm going to cover that off and what my predictions are going to be. And of course, what the impact is on mortgages. Now, landlords are always selling properties, but more so in 2024. And that may well continue into 2025. Who knows? But I really, really want you to think about, if you are going to sell your property, why you must think of selling it to your tenants. You must be having that conversation with your tenants before putting it on the market. And I'm going to give you some top tips and real solid reasons why you should be doing that. So if you're thinking of selling your property next year, please spend 5 minutes educating yourself on that piece of content. Now, next piece is how to refinance on day one. Day one is a bit of a generic phrase. It doesn't mean the day after you got your keys to the property. What that means, it's a generic label to refinancing your property within 6 months, because there's this general rule that you will have heard of that says that if you buy a property, you cannot refinance within the first 6 months of ownership. So if you still believe that myth, then I want to make sure that we can explore that. And I want to talk about how you can refinance on day one. And there's a new lender come into that market to make that even easier. And that's the reason I've really put that on there for this particular month. And then finally, a really sexy topic, Landlords Buildings Insurance. Who doesn't want to talk about that at Christmas? Well, it might not be that sexy. However, it's really, really important. And of course, it's something that is mandatory for every single landlord if you've got a mortgage. I mean, you should be doing it if you've no mortgage, but if you've got a mortgage, it's a mandatory requirement. So please spend 5 minutes just educating yourself on this particular type of insurance. And I'm going to be giving you some tips to look out for, the types of features and benefits that you really should be thinking about and that you can put in to make your life easier as a landlord. Okay, so let's get on with it. Market Watch. What is going on right now? 16th of December as I'm recording this. You're probably watching this after the 19th of December. And it's the 19th of December when the Bank of England were meeting to make that decision about whether they're going to drop rates another probably 0.25% or keep rates the same, or God forbid, put rates up. So you already know this, but I'm going to predict that the Bank of England will keep rates the same. They're not going to do anything. 2 reasons. One, because of the budget back in the end of October, we're still seeing the financial ripple effects of that playing out across the consumers in the UK. So the Bank of England, I think, will want to just see how that pans out. The second thing is inflation, as I've got on my bullet point here, has back up to 2.3%. It was at 1.7 in November. Now, that seems quite a jump. And there will be many commentators with the headlines, oh my God, the wheels are falling off, the economy, inflation's going rampant. Now, if you're a regular listener and watcher of my updates, I have said multiple times that this has been planned, it's expected. The Bank of England are aware that inflation was going to increase around this time of the year. And that's to do with energy cap and energy prices increasing. The energy cap has been revised. And that had that immediate impact on the inflation figures. So it's not a shock. It's already planned to be expected. So we're not having the Bank of England scrambling around trying to figure out what the hell's gone wrong. They know exactly what's happening. And it's a bit like a little bump in the road. The Bank of England expect rates to drop again as we get into 2025. So not a big shock. However, the reality is inflation has gone up. So the Bank of England will want to just pause, I suspect, and just see how that plays out over Christmas and into the early part of New Year. So that's why I think that rates won't drop any further. So therefore, what's the impact on mortgage rates? Well, again, if we look back to November, we saw my update was that, oh my gosh, rates are actually increasing for mortgages. I explained why. And now we're seeing a little bit of settling down. Swap rates have started to come back down again. And guess what? That saving that the banks and building societies are making is being passed on in slightly cheaper rates. Again, 0.1, 0.2, and 0.3. That's a sort of reduction I'm seeing when products are being relaunched. But it's pretty much wholesale. And so, again, good news that we're now seeing rates start to drop a little bit more. But I don't see anything more dramatic than that. We're getting into Christmas. The banks are not going to be giving fire sales in December. You guys are, distracted with the shiny Christmas baubles and mulled wine and whatever else is going on in your lives over December. So there's no point the banks trying to get your attention during this particular month. So we might see rates drop even further in January, even if the Bank of England don't have a further rate drop in the early part of New Year. We might see banks who want to hit the ground running. But again, let's cover that off in January. Now, the one disappointing note is that I want to talk a little bit about something called the Mortgage Charter. You probably haven't heard of it, but it was launched by the Tory government back in the autumn of 2022, partly as a result of, and can I believe I'm going to mention Liz Truss? I swear it's the last time I'm going to mention her name. But after her budget and Kwarteng's budget release in September 2022, there was such uncertainty, not only with the markets, but with us as consumers, that the government produced this charter, which within that had a range of promises that they got the banks to sign up to, that were additional protection levels for us as mortgage clients. And within that charter was one particular promise from the banks to allow us mortgage holders 6 months before our fixed rate ended to lock in the next deal. And of course, in a market where rates are rising, that's a massive peace of mind. So here we are in December 24. That promise was still there. And this is why I've got the word creaking here on my bullet point. In that in the last week or two, the banks were still honouring that. So even if your deal didn't end until June 2025, you could contact your existing lender right now in December 24, see what products were available now, lock one in, and then you park that until June 2025. Fast forward then to June, and you could then see whether that deal that you locked in was still the best deal for you. If it was, you take it. If that current lender now even had better deals because rates had actually dropped in the following 6 months, you ditch that deal and you replace it with a better one. If there's another lender somewhere else in the market offering a better deal than what you'd locked in December 24, you can still ditch that deal and go elsewhere. So there was absolutely no downside to doing that. But you need to know when 6 months ahead of your fixed deal ending to have that conversation with your existing lender. So what's creaking right now is that lenders are starting to renege on that charter promise. And particularly, I'm going to name and shame the NatWest, Nationwide, Santander, Lloyds, Halifax. It's your big major high street banks are now starting to renege on that promise. So the takeaway message for me on this sheet is, please just contact if you've gone direct to a lender, contact them directly, or even go via your broker to say, at what point can I contact my existing lender to find out when the new deals are available to me? Is it still 6 months, or is it now 5 months? Is it 4 months, or is it even less? So you can then put that date in your diary and check that and just lock a deal in. It doesn't commit you, but it's like a worst case scenario. And of course, if there's a better deal and your broker can find a better deal, then you're not committed. There's no penalties. You can still bin it and move on. Hope that's been of use to you. Please, if you want to have a chat with any of our team, there'll be a link at the end of this piece. Make an appointment, have a chat, and see if we can help. In this piece, I want to talk about selling to your tenant. Now, there's many landlords will naturally be selling their property. So if you're thinking of selling your property in 2025, then I want to share with you why you should be having a conversation with your tenant and considering selling the property to them in the first place. Now, the main stumbling block I've found in these cases is that your tenant will say, well, that's great. Well, thank you so much for the opportunity, because we see it as our home. However, here's the issue. We've got no deposit. And of course, you as a landlord, you rung them out of the blue. They weren't saving for a deposit. So why should they have a big chunk of money off to one side that they could use as a deposit? And that tends to be the real issue. But here's the thing. There's a number of lenders out there who will potentially look at any discount that you offer. Now, hold that thought, because I'm going to talk about discounts in a second. And use that discount as if it was deposit. Now, let's put some numbers on this before you start going, oh, no, I want to sell it at market value. And if you still do at the end of it, fair enough. But here's the thing. Let's say the property is worth £100,000 for round figures. So if you were buying that on a residential basis, the minimum deposit would be 5%. So the question to you is, would you be prepared to sell that property at £95,000 and give away £5,000? Now, here's some of the reasons why you might want to consider this. One, speed. Because you've got then a willing buyer. Your tenant is the willing buyer. You're not having to waste time and effort and energy trying to find a buyer somewhere else. In other words, you're not having to go via an agent and all the hoops you've got to jump through before eventually you get the right agent and they come and view it and they give you a figure and they go and take photos and then they get it up there. It wastes time before eventually you can hopefully find that buyer. So it's speed. You get your buyer immediately. The second thing, of course, if you've got a buyer, you don't need an estate agent. So there's no selling fee. So you're going to save £1,000 or £2,000 by sidestepping the use of an estate agent. The third reason is because of rent. If you're going to sell to your existing sitting tenant, then you're going to be getting rental income right up to the day of completion. Compare that to selling it with vacant possession. And of course, you're giving your tenant notice to quit, and you may have a house empty for how many months? 2 months, 3 months, 4 months. So you're going to miss out on all that rent if you sell with vacant possession, because if you want to maximize the sale price, you really actually want to sell it with vacant possession. Because if you sell it with your tenant in situ, yes, you'll get your rental income right up to the day you sell the property. But selling a property with a tenant, unfortunately, doesn't really get the same value because you're selling to a lot smaller audience, a smaller market. So quite often, you'll be selling it at a discount anyway. And the final reason is, listen, landlords have got a heart. You and I know that we're not the evil monsters portrayed by some of the media out there. And if we've had a tenant in that property for years and they've looked after it and they see it as their home and they do the maintenance and they pay the rent on the time. Do you want to be knocking on their door with a letter saying, I'm kicking you out because I'm selling it? Wouldn't you rather give them the gift of saying, listen, I really, really, really want to sell that property to you. And do you know what? Even if you don't have a deposit or you've got a really small deposit, perhaps there's a way we can work the figures out to actually get you there. I might be prepared to give a discount on the market value, and we rebadge that discount as deposit and add that to anything you've got. But even if you don't have anything, if you're prepared to give 5%, then all of a sudden your tenant's got a way forward. Oh my, what a gift to your tenants, as well as you getting the benefits of selling the property a lot quicker and doing a good thing. And even if the tenants have got, look, adverse, of course there's hoops to jump through. Of course that tenant has got to come to a broker and work through all the hoops and affordability and adverse and all the other issues and challenges that you have with getting a mortgage. But here's the thing that, and I would write this down, do not let your tenant go off to their own bank because their current account happens to be with TSB or whoever. So surely they'll be kind and give us a mortgage. Because here's the issue with that. I've looked at about 100 different lenders, and only 25%, only 1 in 4 of those lenders offers that scheme I've just described, where if you're prepared to offer a discount of, for example, 5%, that lender, that bank says, right, they'll be prepared to see that discount as if it was deposit. Only 1 in 4 banks, lenders will do that. And if your tenant happens to go to one of the other 3 banks that do not offer this, they're going to find that they're going to kicked out because the tenant's going to say, I've got no deposit. So it's going to be a very, very short conversation. So please, if you're going to have that conversation with your tenants, direct them to your broker, and your broker will understand that these banks are out there and will obviously then work with those lenders who are going to facilitate that. So please, if you're thinking of doing that in 2025, look, have a chat with the team. There'll be a link at the end of this piece to have an appointment, just so that you are maybe well versed with how it might work. Speak to the advisors to get a little bit more information. And then if you're having a positive conversation with a tenant, direct the tenant to the broker to then continue that conversation. And hopefully that is a win-win for everybody. In this piece, I want to talk about day one refinancing. The first thing I want to say is it doesn't mean literally day one after you pick the keys up to the house. But what I do refer to is that first 6 months period, because there is this general myth that's out there that goes like this, that if you buy a property, let's say at discount, let's say you bought it for cash, let's say you bought it on bridging finance and you want to add some value to it and get the value back out because you've done some renovations, refurbishment to it, or as I say, you've just bought it for cash for speed, and now you want to pull that money back out. But there's got this general rule that says that you can't do it for 6 months. And so I'm not necessarily want to explode that myth, because I covered this off back in June of this year in a lot of detail. So I'm not going to go over it in the same detail. So first of all, if this is something that you are looking to do in 2025, i.e. refinance a property that you bought and it's within 6 months, then please go onto YouTube, write this down, go onto YouTube. Go on to the Mortgage Home channel. When you're on the Mortgage Home YouTube channel, there's some tabs across the top. The middle tab says the word video. Click on that tab and you'll see a little search bar. If you type in there day one, then it'll bring up a few videos. One of them is the video I did back in June covering this topic. So please go back to that to look at in some detail. Now, the 3 exceptions to this general rule is that you can't refinance within 6 months are that there is a bunch of lenders that say we'll allow you to refinance in 6 months if you still want to use the original purchase price. So you don't want to, you haven't really done an uplift in the valuation. You haven't done any refurb work. You're not desperate to pull that extra equity or added value out. You bought it for 100,000. You paid cash perhaps for whatever reason. And now you just want to pull out 75%, say, of that £100,000. So there are lenders out there that'll be happy to do that within the 6 months on day one or as soon as you're able to submit that application. There are also lenders out there that say, well, if you can demonstrate you've done some refurbishment work, you've done some significant meaty renovations, not cosmetic work, but more substantial, then show us proof of that. And we'll we'll add that to the value of the property. So if you bought it for 100 grand, you've done 20 grand's worth of work, we'll say it's worth 120, even though you might think, well, it's worth 150. If you're happy with that 120,000 figure, then there's lenders that will work on that basis. The real difficulty is in the third scenario, where you want to use the new uplifted valuation. So you bought it for 100k, you've done some work, or you just managed to get an amazing discount. And all day long, that property is worth 150,000, and you want to get 75% of 150,000 out as soon as you can. That's the utopia. That's what many landlords are aiming for, and that's the most challenging one to do. But there always has been a very small number of lenders that have been happy to consider that. But we've now just got a new lender added to that party. So Aldermore, a lot of you will know Aldermore. Maybe you've heard the name. Maybe you've got Aldermore mortgages. Well, they amazingly have just relaxed their policy in this situation. So they've now said in the last week that they will consider mortgages within the 6 months based on the complete uplifted market value and endeavor to give you 75% of that. So I'm really delighted to share that, when lenders change policies, sometimes they're tightening policies up, but Aldermore, hats off to you guys for this, because it's something that I think a lot of us landlords will want to take advantage of. So if you're looking to buy a property anytime now or early next year and will want to refinance within 6 months, there are lots of options out there, but you need to get your ducks lined up. So please, the takeaway message is book your appointment in now as you're buying that property, so that we as brokers can help you to refinance that within the 6 months, hopefully close to day one, so you can pull that equity out and move on to that next project. In this piece, I want to talk about landlords buildings cover. Now, it's a topic that should resonate with every single person that's watching this video. It's not the sexiest topic out there, but it's massively important. Get the insurance wrong, and when you're trying to claim on it and you found that you've been shortchanged, you've got a real cheap policy and it's poor quality, then you'll wish you paid attention and understood and educated yourself on what a real good quality, high value buildings insurance should look like. So today I just want to give you a few little tips and things to consider in this regard. So the first thing is to say, make sure you've got the right type of policy, because if you think a landlord's policy is a landlord's policy, no matter what type of investment property you've got, well, you're wrong. There are policies out there specifically for long-term letting. There's policies out there that are for HMOs. There's policies out there that are for holiday lets. So make sure that you've actually got the right landlord's insurance. Or if you've had the property as a long-term let and now you've repurposed it for serviced accommodation, for holiday let use, for example, then you may not have thought about this, and your insurer is not any the wiser until there's a claim coming in, but your insurance needs updating. So please, first and foremost, make sure you've got the right policy for the right type of investment. The next thing, and it's something that's just never going to go away, this is the type of land that we're in now where, particularly due to global warming, we're getting these extremes of weather events. The UK is more likely to flooding. We see it in the news, not only in winter, we see it in August with flash floods, with problems with floodplains getting worse. And therefore, we're seeing more insurers now either excluding flood damage and flood claims from policies completely, or the excesses are getting pushed up into the multiples of thousands of pounds. So, have a look out for the sort of excesses that you're being offered here, because just because one insurer is saying you've got an excess of several £1,000s for flood damage doesn't mean that they're all doing the same. So shopping around or using a broker who has got a range of providers to go to see whether we can get that flood excess down, because that is one area where excesses are creeping up. Now, under insurance, look, we all want to save money. We all might be looking at our insurance policy with rose-tinted glasses. Oh, we're never going to claim. And so the amount that we want to cover ourselves might not be the amount that we need. Now, the best way to describe why this might come back to bite you on the bum is, let's say you've got a holiday let, and let's say you cover the contents, and the contents are actually worth in total £20,000. But on the policy, because it'll be cheaper, you put £10,000. And there comes a day when there's a claim that you want to make on your contents side of the policy. And let's say it's for 2,000 quid. If the insurer at that point, because they're doing some due diligence, maybe they send an assessor out, maybe it becomes obvious that the value of your contents is actually 20,000 quid, but you've insured it for £10,000. In other words, you've only got 50% cover. Now, you might think, well, my claim's for 2,000 and I've got £10,000 of cover. What's the problem? I should get paid out my £2,000. But insurers don't think like that. They go, hold on, you've been trying to get insurance on the cheap. You've only got 50% cover. So guess what I'm going to do? Yes, you've got a valid claim, but I'm not going to pay you out 2,000 because you've got 50% of the cover. I'm going to pay you out 50% of the claim. So please, under insurance is a real thing. As brokers, we see it quite often. And to get the right level of insurance, instead of putting 10,000 to 20,000, might be £1, a couple of pounds extra. And you think, oh, I'm saving money, or you don't even think of the implications. So, using a broker who understands the knock-on effects of trying to, just tweak these policies and save yourself a little bit more, then it's something, you really, really shouldn't be shortcutting. And the last area, and it's something I use, I have a portfolio policy that includes something called home emergency cover. So if you've not heard of this before, just make a note of this right now. Grab a pen and paper, write it down so that you can speak to your insurer or use it to speak to our insurance broker to talk about this particular aspect, because it's really, really valuable. What is it? Well, it covers emergencies such as gas issues, boiler issues, plumbing issues, lock issues on the doors, lost keys from your tenants. What other eventualities? Eventualities where your tenant has to move out of the property for a short period. So it's those emergencies where in the past you might have just rung up, a certain tradesperson and get them out there. So now you can have it added to your policy so that instead of ringing the Corgi gas engineer or the plumber or the electrician, and guess what, they don't work on a weekends or they don't work after 5, or you really struggle to get hold of them on an evening. Now you've got one phone call with your insurance company. It's open 24 hours a day, 7 days a week, 365 days a year. And they will then deal with getting the appropriate tradesperson out for that emergency. So it's a real peace of mind for me as a landlord to know that I've just got one call to make and all those different tradespeople are there for those different categories of emergency for my tenant. So if you want to explore that a little bit further, what does that add to my premium? Is it worth it? Then please just click on the link at the end of this. There'll be a link to our diary system. Speak to the team, speak to Yvonne, who's the expert in all matters insurance, and she'll talk you through. She'll give you more literature on home emergencies, tell you what it covers, and of course, what that means for a premium. And then you can take a view. You know, you're armed with the information. You can then decide whether it is good value. But for me as a landlord now, I think it's been an absolute godsend knowing that I've got that extra safety net there across all my portfolio. So I hope that's been really useful to you. Give you some tips and tricks in areas that you might not think of looking into, particularly when you go online or go on the mortgage comparison sites and just going for the cheapest policy out there. Then that's great until you want to claim. And then you'll find yourself wanting. So I hope that's been of use. If you want to just chat to the team about anything at all, there, take a screenshot of this last slide of all the different ways to get in touch with us. Other than that, thank you so much for supporting The Mortgage Home, for watching our channel and the updates this year. And please, for next year, do go onto YouTube, do subscribe to our channel, and you'll get these updates coming through to you for hopefully months and years to come. Have a fabulous Christmas and a prosperous 2025.